RS flip invalidated. Key levels to watch to determine when a Bitcoin correction is coming. Hey guys, it's Keith Allen. Hope you had a great weekend. Price action did, well, exactly what I said it was going to do over the weekend. And now we've, weekly close. We got some volatility. We're going to talk about that. We're going to talk about all the things developing here. Of course, we've got a recovery here for the moment, which is a good thing. But after that consolidation through the weekend, we saw things start to degrade in price on both Bitcoin and alts. And after the close, the RS flip at 100K was invalidated, just absolutely annihilated. And a critical support test began to develop. So Bitcoin has passed that test for the moment. Keywords, the moment. Now we got to look at what's happening in the charts, and what we saw this morning that indicated that we were going to see a recovery, and what we need to watch to determine whether this recovery is going to hold, what that key level is that we need to watch to determine whether we're opening the doors to a deeper correction, potentially 30% or more. So let's start with let's start right where I started the morning. And I'll tell you, I do these when I do these streams, I'll start looking at charts in the morning and kind of formulating what I'm going to look at, and then try and write some stuff up to give a little description for the YouTube version. Oh, by the way, live chat is open on YouTube. If you'd like to join me, would love to have you. Would love to engage with you. If you have questions, if you have insight you want to share, we want to hear it. So by all means, do that. Also, if you haven't done so yet, do me a favor, smash all the buttons, help me grow this thing. Okay, you know how it works. So here's the deal. A lot has changed since I first started looking at charts this morning. We did see that recovery, and I actually posted that at about 7:45 this morning on X. When I saw in fire charts, I actually saw the smaller classes starting to buy, and so this was something that I've seen before, where we'll start to see some TWAP out of the smaller classes, then the whales come in, and we did see that support come in. And let's get right to it. Here it is. Fire chart showing signs of a Bitcoin recovery. If price can reclaim the 21-day moving average, then liquidity overhead should make for an easy run back towards 105K. See, all this liquidity was cleared out here, right, on this grind downward. And so we made it down to the 98s. This was actually through the 21-day moving average and the 50-day moving average, and we saw some support coming in here, and then we started to see this buying. So this was contrary to what was happening in the charts. While everything was going down, still we started to see what appeared to be some TWAPing out of the smallest class, and then whales started ticking up, and the other classes started ticking up too. And we were right here. We had a bit of an iceberg here at about 98 and change, and then cleared through it. And now Bitcoin has of course recovered the 100K level. Let's look at this on the candle chart here. And as you can see, and I posted last night as well, we were talking about this breakdown happening last night. Let me turn off the VWAP here. I have so much going on in these charts. So notice how the 21-day moving average is almost perfectly aligned with that 100K RS flip. Okay, and we had tested this area a bit, and last week it looked like we were validating that RS flip, but when you punch a hole through it, it's invalidated. Sure, we've recovered it for the moment, but there's no guarantee that we hold here. The fact that and yesterday I said that Bitcoin needs to stay above this 21-day, the green 21-day moving average, and here's why. Right, we've just been through a death cross with a dip that followed, and then a golden cross as we climbed our way out, right? And so we want to avoid another death cross here, because another death cross, a second death cross here in this short amount of time, could lead to a much deeper correction. So I want you to notice we have confluence here, or very near confluence, with the 21-day, the green 21-day, and that 100, that psychological 100K RS flip zone. We have the blue 100-day moving average down here a level that we had also tested. We RS flipped that 91K level. And now we have the 200-day, the purple 200-day moving average coming in right above this prior consolidation zone. We've talked about this level last week a little bit with some folks in X. So these are all obviously important levels to watch, but I think that the one that really is the gateway right now is this 50-day moving average. If we look at it on the weekly, we'll get some different perspective, and there's something to be said for those higher time frames. You can look and see that the 21 on the weekly sits below that level, right? Below that range. We never did get to retest that 86K level, excuse me, that we were looking for. We did, incidentally, as you can see, get a new trend precognition down signal on the weekly close. And this is a tentative signal, of course. It could certainly invalidate. And we've seen the types of moves. I don't want to use the word manipulation, but I'll say less than organic activity that has invalidated some of these signals recently. So, Trump pumps, etc., could change this. So this is not a solid signal. This is not a printed signal yet, but it came in pretty strong last night in the 45% range, and it's only gained strength. So that's a sign. It's obviously already looking pretty good. This does not necessarily mean that we're dumping down to here. It just means that we're not likely to make new all-time highs this week. Okay, and so at this stage, Bitcoin has reclaimed this 100K level, but barely, right? We're only sitting $500 above, and we did have a rejection here. And so the confluence that we have with the trend lines, I think, is important to note. And as these lines get drawn higher, that's a positive thing. And as we can see on the daily timeframes, they are getting drawn they're literally perfectly aligned right now. So again, this 50, I think, is the gateway to paradise, if you will. And if we do get that breakdown, what would that look like in terms of a correction, right? We've talked before. I went into this again last week. We talked about deep corrections that occur in bull markets historically, and I outlined a bunch of them in the 20 to 40% range, but seriously, we've seen them way deeper, right? I don't think we're going this deep, by the way, but 30% certainly seems like a possibility, right? And that would take us, let's see where that would take us from here. That would take us right to this prior range that we talked about. If we took it all the way down to the 200-day moving average, that's a 30% drop. It's also very close to where we have this confluence here and this little bit of consolidation, very little bit of consolidation we had at the beginning of this rally out of election day. This was November 5th, election day. This was the big celery stick that got us out of this. We consolidated for 1, 2, 3 days and then boom, out. So that's a possibility for sure. And doing so would close the CME gap along the way, which a lot of folks pay attention to. So that's a possibility, right? Not saying it's going to happen right now, but saying that is for sure a legit target. At the moment, we can see some liquidity has appeared on the upside to, kind of an iceberg appeared here to keep price back down. So let me zoom out a little bit and see if we have a bid ladder extending. You can see here that we do have a bid ladder extending down into the 88 range, actually down to the 87 range, 87, 88 range. Yeah. So this suppression right here, maybe that's trying to push it back down here to the 96 range and retest this level here. Excuse me. 96 would just be below the 50-day moving average, right? And if we get below this level and we close below this level, I think that this is the likely next landing zone. And maybe that tests, we tested this several times, like 10 times already. So that's a solid place for a test. Ultimately, bulls want to see an RS flip above this 100K level. What's most important is that we stay above these moving averages, right? We'll eventually get there. If this test isn't the one, we will eventually get there. But we'll also eventually have a deeper correction. So that's why I want you to be in tune to this stuff here. Again, live comments are open, guys. Hey, Patrick, nice to have you here. As always, Patrick, one of our Material Indicators community members. Glad to have him. Glad to have you in the mix, Patrick. So let's look at some things that we have been discussing in the Material Indicators community. And that's a chart that my partner Fred has come up with. And this is pretty cool here. If you're not confident in technical analysis, then this is a great thing for you to try out. And I'm going to try and explain that to you here. My mouse is going a little crazy. Hey, Santos, good to have you here. Great to catch you live today. Like always, hey, man, I appreciate you guys following me, and I appreciate the support. So thank you. Thank you very much. Oh, from Bangkok. Oh, man, I love Thailand. I'm not going to say Bangkok is my spot, but I do love Thailand. One of my favorite places on earth. Just an amazing, amazing place, which I guess is why you guys say amazing Thailand. So back to what I wanted to show you here in the charts. All right. So Fred actually developed this last year, and this is pretty cool. So instead of drawing, lines on charts like we typically do, looking for those confluences, this is centered around the annual trend and then quarterly opens and closes. And so this is what was developing last year into 2023. And so the orange line here is that 2023, 2024 trend, and really the trend that we had been working off of throughout the year. Let's take it down to the weekly and see what's happening here in terms of support levels. And you can see that this trend is still intact here. Now, if we wanted to go all the way back to where this run started, this was the FTX crash all the way down here, right? We've got a couple different, this is the trend from 2022. This is where we kind of adjusted from in 2023. And here we are, 2023, 2024. And the blue line is the new trend, 2024 to 2025. And this is what is holding here. So now I've got a chart of just that trend. Okay. So the orange line is the previous year. 24 to 25 trend, and went right to that support level. Literally, boom, right there, held, and now we're recovering from this. So if you're not great at technical analysis, the easy way to draw this is to start on an annual chart, a yearly chart, and draw the trend line from last year's open to the close, to this year's open. And then start building quarterlies from the opens closes. And, you can do whatever method, you could do a high and low, or you can also do what I've been doing is just taking bars and drawing from the opens and closes. Simple as that, opens and closes. And you're basically just replicating, you'll draw your annual trend, copy paste it, and then just replicate it in those same, from opens and closes. Simple as that. And so this gives us a pretty interesting perspective of what price is doing relative to that longer term trend and relative to those important quarterly opens and closes. And if we take it down to the weekly or the daily, we get a great perspective of really the most important technical levels to watch in the chart. So everything I said about the moving averages, I maintain that. And I'm a guy who likes those moving averages. Some people don't. Some people question technical analysis. I'm obviously a firm believer in technical analysis. but I realized that all lines are not created equally. A little bit subjective to how we see the charts, and so this is a way that really eliminates that, and you don't have to guess. You simply draw it from the opens and closes or the highs and lows, whichever you want to do, to get these kinds of results. And so this is pretty interesting to me because if we lose this level, as I said before, I think that 100-day moving average comes into play, and you see this is like right around the 91 6K level. And if we go back to our original chart, we can see that this is right there at that 91 6K level. So a lot of confluence there. That's very, very important to me. And then going back to the next level, let's get my chart back again. And if that breaks down, then we would look to the next line here, which you can see there was some support here over time. But if you lose that, then we go back to that 200-day moving average, which is around that 76K level, 76, 77-ish, which again, we have illustrated here. So I think that's an interesting way to look at charts. I think that gives us some perspective that helps us with our narrative. I think it helps give some different perspective so that you could look at charts from 100 different analysts and see lines drawn 100 different ways. This is a way that is consistent with anybody that does it, and anybody can do it. So I encourage you to start breaking out of the conventional way of doing things and think about doing this. Hey, Jason, greetings from Prague. Good to have you here, man. I appreciate it. I appreciate all you guys, as always. So this is good for the moment, but I don't think that we've avoided a deep correction by any stretch of the imagination. Now, maybe because we have this series of new narratives and positive fundamental things happening with the new administration, that maybe we don't go as deep as if we have in history. But so far, we've not seen anything that's going to prevent that from happening. Now, some interesting news developed over the past week, right? And I know I posted some of that on X as well, or in our community actually, and some of that was. I'm gonna go over to fire charts just so we can watch what's happening here, just in case something develops while we're chatting, if you don't mind. So some interesting developments here over the weekend, obviously, or over the past week. Obviously, there is a lot of concern over the Trump administration's executive order. Everybody was expecting a Bitcoin reserve, and the name Bitcoin Strategic Reserve has now been, which is what Michael Saylor talks about. And I think the entire industry was on board with a crypto strategic reserve for the U.S. It is now developed into a digital asset stockpile. That means it's not just Bitcoin. Now, maybe there's some semantics there. Maybe it's about leaving the doors open for opportunity. But maybe, this is a guy who launched a meme coin for himself and his wife the day before he was inaugurated. So, that feels a little icky to me. I don't know about you. But yes, icky is a technical term. So, who knows what that means? He has said that there was also actually Eric Trump over the past few days also said something about potentially eliminating capital gains taxes on U.S. based blockchain projects. Okay, so that brings the Ripples, XRP and HBAR and Cardano and Litecoin into focus. So imagine that. Now this isn't something that he can just do as an executive order. All right. This actually takes an act of Congress. And if you had asked me a month ago if he was going to be able to do this, or for that fact, whether Kamala Harris was going to be able to get a capital gains tax on unrealized gains, I would have said no. It will never pass Congress. But um, this is a different situation here. Trump seems to be getting so far everything he wants. He's doing everything he said, and he's getting everything he wants. So hard to. I just wouldn't. I wouldn't bet against this guy at this stage, I guess is what I'm saying. Jason says, my take, they've got a lot of coins already. They allow them to just leave them leave them as they are. Yes, they do have coins. They've also, seized some coins, and you have to wonder, of course, Ross was freed last week, which is also huge for the community. I wonder if any of those Silk Road coins are being returned to him. Right? I'll bet they're not. I'll bet that may be part of the deal. Right? We're going to let you out, but you cannot gain access back to your coins, because those are going into the U.S. strategic digital asset stockpile, or whatever they call it. So there's that. The no capital gains thing is really, really interesting to me, because I personally have been looking for coins with stronger fundamentals. I don't call myself a maxi, but I also don't shitcoin, right? So maybe I am a bit of a maxi. I do play with a few alts. I do hold a few alts, but for the most part, I trade them. I get in, I get out. I let my MTF bots do that business for me, and I don't hold a lot of alts for a long period of time. That will change. Well, actually, if they do pass that law where there's no capital gains on on those US based coins, then those are going to be the ones that I trade exclusively, because I'm getting clobbered with 30% tax. 30% capital gains tax kills me every year. Doesn't kill me. I'm still making profits, right? But it obviously takes a big chunk of profits every year. So I would personally, as a U.S. citizen, I would, at that point, if that law is passed, I would focus my efforts on Bitcoin and that basket of alts that are not going to get taxed, and that's probably how I will shape my trading strategy moving forward, if that indeed comes to light. It looks like this level is getting taken out right now. Now you can see some buying happening here at the bottom of the chart. Whales are doing it kind of slowly. This is a $13 million wall. It's not going to take much to get through it. And, don't be surprised if we see another iceberg come up, but it looks like they're trying to eat through this right now. We did have one whale buy come in. Actually, this is kind of interesting of where this happened. Let's see. Let's see if I can see that on that earlier chart. Yeah. So down here we did see that those brown mega whales did actually start buying right off of this bottom. So that's interesting. Interesting timing. And at the moment, it looks like we're on our way. This is getting replenished a little bit. So we'll see if they can eat through this at this point. Again, I want to zoom out a little bit wider to see if we have any more developing liquidity situations here in different ranges. And at the moment, yes, we still have a small wall, 14 million or so, around 80K, but I think that we're going to stay up above that level here, at least for now. This bid ladder extends down to the 90K level. And if we look back at this original chart here, we wicked down below that level once before as we were retesting this 91 range. So this could come into play. It really could come into play. It really all hinges on what happens here. And as I said in the beginning, I really want to see the 21-day moving average hold. Okay. It just, what we don't want to see is another death cross here, because I think that leads to more bad things. I think that is what would lead to that deeper correction, at least to the 100-day moving average, if not that 30% move that we talked about happening down here. So keep an eye on this, right? This is the key level to watch. And I'm going to give you one more glimpse of this, kind of diagonal analysis that I shared with you, because I encourage you to create a chart like this and just have this as a point of reference, because you don't have to redraw these lines throughout the year at all. All you do is each quarter is you add the next open and the next close at each quarter. Simple as that. So you can build on it, but you never have to redraw any of these lines, never have to adjust or move any of these lines. So this is a cool way to kind of track what's happening through the year. Going to wrap it right there, guys. If you don't have anything else, it looks like, the alts that we saw getting hammered yesterday, we are getting some recovery here. Let's see real quick. ETH. What did ETH do? ETH wicked down how far? ETH wicked down to just above 3,000, but holding this 3,000 level, and that's the 200-day moving average. That's a positive sign for me. What's not good is the death cross that is looming here between the 21-day and the 100-day moving average. We could see more downside here coming. So whether it holds here at the 200-day, keeps us above this level, is remains to be seen. If not, then I'm looking at the 0.618 at 2,500, which seems to have been really a good consolidation range for ETH over the past year. So keep that in mind for ETH. What else do I have up? And I got a Litecoin chart here. Not going to lie, I did buy a little on this dip here of Litecoin. Hey, maybe I get that 30% pass on capital gains tax when this all is said and done. We'll see. So I've got to happen to have some interest in this coin because I think it's got some good use cases. What's another one? Solana has been getting beat up a little bit lately. I have actually been using the MTF mean reversion indicator to pick up some Solana. Let's see if I got my MTF grid open. Oh, you know what we should look at really quick is Bitcoin dominance and USDT dominance. We talked about this last week a little bit, and I think this really also is something that's important to watch. Bitcoin dominance, for those who are looking for an alt season, you want to see Bitcoin dominance fall down. You want to see it push towards this, sub 50% level or lower to really get into an alt season. And let me just illustrate what that looks like here. We're going to add Bitcoin price into this chart, and you can see as Bitcoin dominance falls, then so does, here we go. Dominance falls, price falls. And so what we want to see for an alt season is Bitcoin dominance falling back. It's climbing back up now, which is why we're seeing it appreciate like this at this point. And this, by the way, this was the from November 5th, this was just craziness. And then we got a bit of a rejection. We saw it pull back a little bit. So you want to see, if you're looking for an alt season, you want to see Bitcoin dominance reject here at this trend line. Simple as that, which is at about 60%. Similarly, USDT dominance. I've drawn the same thing here. This is also Bitcoin price. So money goes to two places. It's either, or three places, I should say. It's going to stable coins, and then it's getting allocated to either Bitcoin or alts. And so when USDT is bottoming out, that means that money is allocated into Bitcoin and or alts, and we're seeing those assets appreciate. When USDT dominance is lagging, is climbing, rather, then we see, and as you can see here, we get a bounce off the bottom here for USDT dominance, and now Bitcoin price is retracting. So these are some key things to be watching relative to everything else in the market, relative to the technical analysis, like relative to the lines, relative to what I just showed you in, this setup is watching dominance on Bitcoin dominance and on USDT dominance to get a more holistic picture of what's happening in the broader markets here. What did I say I was going to look at here for you? Oh, Solana on MTF. Where's my MTF chart? Did I close it? Bear with me 1 second, guys. I only have like 27 charts open. Okay, here we go. This was Bitcoin. Let's go to and Bitcoin. By the way, we're discussing in the chat this morning about what deviations are best, and I run a grid of deviations, right? And this is maybe a little complicated to look at. This is our MTF mean reversion indicator, by the way. And so here's a 1% deviation, and this. So there's a lot of different ways to use this. You can use it as a scalper in 1 minute on 1 minute time frames. You can use it to dollar cost average your way into a longer position, a longer term position. And so this is obviously pretty aggressive here at 1%. There was some drawdown here, but it's a dollar cost averaged price, and now we are back in the green here, right? At a 2% deviation, you can see much more conservatively. We didn't take as many signals. It was a perfect call. And that is at this point, right? There was 2 signals here. 1, 2, we average them together. We're going to say it was somewhere around here. And that's already almost a 4% move, right? So whether you're using this to scalp or you're using it to accumulate over longer term, this is a great tool. Now, alts are more, and we haven't seen very much in the 3% range out of Bitcoin in quite a while. Let's see, there was one signal back on January 20th. This was inauguration day, right? We got that one flush, and so that one obviously did very, very well. Solana, I've been using it on Solana lately, and higher deviations performing better for Solana because of the volatility in this asset. You can see there's been lots of movement here, right? So here's at 3%, and yeah, we got caught here. Some of these were before the bigger dump, but that's okay because we're dollar cost averaging our way down. That's going to put this average price probably somewhere in this range. I'm just ballparking it here, right? Because I have 1, 2, 3, 4 signals down here. I got 2 signals up here. This is going to DCA this down. And so I'm going to ballpark my average price somewhere around here. And we're already at 4% profit. So this is a great tool for as a scalper, and it's also a great tool for building longer term positions, so you don't have to try to identify what the support levels are going to be, where you want to buy, et cetera. So something to keep in mind. Going to leave you with a parting shot here of the order book, a broad view of where liquidity is and where it isn't right now. Biggest pocket of resistance is at that psychological 110 K level. There's 121 million in ask liquidity sitting there at the moment. When we apply a little bit of contrast, we could see we've got decent support holding above that 96K level, but we really do not want to lose that 50-day moving average, because if we do, that could lead to a death cross that brings us down further. Going to wrap it right there, guys. I hope this has been a good one for you. It's been fun for me, and I, as always, do appreciate all the engagement from you guys. I appreciate the ongoing support. Have a good one, guys. Let's trade safe. Let's navigate our way through this market and make this our best year of trading yet. Have a great day and have a fantastic week. And as always, trade safe, my friends.